welcome to Oliveboard. I hope you all are fine and doing well. So finally ABM exam is done. Now it's time to crack this BFM examination. So with the right strategy and with great determination, we are able to crack this exam also. So be confident. Just we are going to start our first class today for module A capsule. There we will learn all the important concepts of our syllabus. So what will be the plan for our first? I am telling about the module A. We know that we having here 10 chapters in our module A, international banking. So we are going to start with module A, international banking, and in this basically in this capsule batch, just let me tell you, first day we are today, that means we are going to cover 3 chapters. Okay, in today's class we are going to cover 3 chapters. Next class we are going to cover 3 chapters, and then 4 chapters in the third day, which is the last class for module A. In this class, in these classes we are just covering all the theory, all the theoretical concepts which is helpful for our examination. Numerical sessions, we have different separate class for numericals. We are having separate session for our MCQs, and also again revision class is there for our module A. So make sure you are there, you are learning the things, you are understanding the concepts. If any problem is there, any type of issue is there, kindly connect where you can ask your doubts. Okay, so and also I will provide the PPT after the class. I will upload the PPT to you, so it will help you. So just starting this chapter, our chapter first, that is exchange rates and forex business. We know that what is the meaning of exchange rates. That is the rate where we exchange the currencies, and forex business is like buying and selling of securities, that is foreign, in foreign exchange, international level of transactions, we can say foreign exchange. Now this is type of an agreement. This is type of an agreement where we basically exchange one currency to another currency, but there is a fixed rate. We have to follow that fixed rate to exchange the currencies. Okay, either this thing done today immediately, or this thing will be done on the future date also. So that is basically that rate, that thing is called exchange rate. For example, if 1 US dollar is equals to 82.42 and 1 euro is equals to 1.05 US dollar, and we know that this exchange rate fluctuates in every 4 to 5 seconds. We can't say that if today the rate is 82.42, that does not mean after 10 minutes the rate will be the same. That will fluctuate in every single 4 seconds or minute. It fluctuates very constantly, or I think 21,600 times it fluctuates in a day. Okay, so if I say about what is the meaning of forex market, a global market, not a physical market, but here currencies are traded. It does not exist, it does not need any type of physical location. Okay, here every people is connected through phones, their laptops, their internet platforms, and it is a 24/7 market, never close. If in India it is closed, that does not mean the whole world market is closed. Timings are different, but it is 24/7 market, but 5 days a week, because Saturday Sunday is completely off for everywhere. Okay, if I say it moves according to the time zones from Tokyo and Sydney in the east to London and New York in the west. It ensures non-stop currency trading. Non-stop currency trading will happen here. So what is forex market? That in short we say generally FX market, foreign exchange market. It is a not a physical place, but here securities are traded, like buying and selling of securities are happened here 24/7, 5 days a week, and it is done through the phone, computer, tablet, via internet. Yes, who are the major participants in the forex market? Basically, six major participants are there. Where are central banks? Okay, they basically helps in managing all the currency reserves. Also reduce the uh, like they will check that enough currency reserves are there to manage the things. Also, there are some commercial banks which helps in currency exchange, like RBI authorized some peoples who are uh, knowing who we are called as authorized dealer, who get the license from the RBI, so that those persons can deal in the foreign exchange transactions. Okay, then forex brokers. Who are forex brokers? Who basically are in the between, who are responsible for making the settlements, making the transactions between the buyers and sellers. Okay, corporations are also the major participants because they transfers the money across the border for trade or the investment. Individuals, these are basically these forex used for travel, personal needs and investments. So obviously individuals are also important and they are the participants in the forex market. That does not mean like who helps in regulating the forex market. Why forex market is that much important? Who makes the forex market important? These are the participants who makes forex market important thing: central banks, commercial banks, investment bank funds, forex brokers, corporations and individuals. Clear? And now what is the key feature in the forex market? First, it is available 24 hours. Okay, there is no physical location. It is very highly liquid, where you can easily sell the currency, you can easily buy the currency. Highly liquid market. Rates are fluctuated at every 4 seconds, and every single global event influences that market. Whatever that are the government policies, interest rates, political events, these all are things influences the forex market. And here you can see daily trading reached US dollar 6.6 trillion, and in 2025 it is more than US dollar 6.6 trillion. Here you can see the spot transactions are there, swap transactions are there, as well as derivatives also there. But if I say now audible, I'm audible now. Okay, let me tell you quickly what I told you. Don't worry, don't worry. uh, just let me tell you about quickly what I told you. See, I told you that forex market, first I told you that we are going to cover our module A in 3 days. First day 3 chapters, that means today we are going to cover 3 chapters, tomorrow we are going to cover 3 chapters, next day we are going to do 4 chapters. Only theory we are going to cover, because for numericals, for our case studies, for our MCQs, we are having the different separate sessions. Okay, so complete focus here is on only on theory. Okay, then this is the group. This group, please join this group where you can ask your doubts. Wherever you feel any type of problem, come and ask there. Okay, so I will be there to tell you the things related to your problem. I will help you out. Okay, so that is the group. Scan this and join this. Okay, then what I told you about the exchange rate. What is the meaning of exchange rate? Basically, exchange rate is that rate where the currency price is fixed rate, having the fixed rate for another currency. Like 1 US dollar is equals to 82.42, 1 euro is equals to 1.05 US dollar. That rate will be fluctuated in every 4 seconds, and according to the data, exchange rates fluctuates 21,600 times a day. Okay, then we learn what is forex market. This is a market where we do the buying and selling of currencies. Okay, it operates 24 hours a day, 5 days a week. No physical location, only it operates at global level, but no physical locations is there. Here people are connected through the phone, institutions connected through the computers and via internet. Okay, then it is a 24 into 7 into 5 market, like 24 hours a day it is open, but 5 days a week because Saturday Sunday is off here. Then who are the major participants are here? Central bank manages all the reserves, but also these central banks authorize some institutions, some people. Those people are called as authorized dealers. Authorized dealers have the licenses from the RBI, and they will deal in foreign exchange transaction. They handles the foreign exchange transactions. Commercial banks, they obviously help the clients who having the currency exchange, who wants their currency exchange. Then there are some investment banks and funds who can use forex to hedge the risk. Like investments are there in different currencies, they use the foreign exchange just to protect against the risk. Forex brokers who act between the buyer and seller. Due to this broker, transactions become possible. Basically act as a middleman. Like in marriages, there is a one person who acts as a middleman who manages all the things. Like that, forex broker is there. Corporation who transfers the money over the border for the trade or investment, and individual. Because of these persons, because of these institutions, forex market is popular at that level. So obviously individuals who wants to travel America, who wants to travel Europe, they need foreign exchange. So individuals uses this thing for travel purpose, for personal needs, and for the investment. What are the key features? This is the market that is 24 into 5 days open. There is no physical location, very highly liquid, because here easily selling and buying of currencies happen. Here major currency rates changes in every 4 seconds. In every 4 seconds is the generally minimum rate. Okay, then next is here global events influences this market a lot. Whatever the economic restrictions, political restrictions, decision of the government, it influenced by the global events. High volume, having the high volume, as you know that recently due to the tensions of India and Pakistan, one day market is very is at very low level. Okay, so that type of things, that type of events influences foreign exchange market. High volume here in 2020, there is US dollar 6.6 transactions. Global trading volume reached this amount, and in 2025 it is over than 6.6 trillion. And here you can see the spot transactions, swaps, and the derivatives. Now the thing is there, spot, what do you mean by the spot transactions? As you know that if I say about the spot transactions, when a foreign exchange spot transaction, which is known as FX spot, it is an agreement between the two parties. It is an agreement between the two parties to buy the one currency against selling another currency at the agreed price for the settlement on the spot date. Means the exchange rate at which the transaction is done is called the spot exchange rate. Okay. And if I say about the swaps, what is the meaning of swaps? Swaps is like a contract where two parties are agrees here to exchange their cash flows or exchange their payments based on one or more financial instruments. Okay, so that is swaps. And derivative is also an underlying contract. Now if anywhere you feel any type of doubt, please ask here. I hope it is clear. Now you can see turnover grew from US 5 billion to 34 billion. You can see the rise, 5 billion to US dollar 34 billion. See the rise here. And exchange trade derivative averaged here US dollar 12.2 billion daily in 2019 to 2020. Okay. So you can see the level of thing here. Then this is just for knowledge that how Forex market is popular. Now what are the summary here of the characteristic? It operates 24/5, no central market. It is basically over the counter market, like no physical location is located anywhere. It involves the global participants from the multiple time zones, like from New York, from Sydney, everywhere the timing is different. But everyone is involved in this market. Highly liquid. It is affected by political and economic factors. It is used for trade, investment, speculation and hedging. Now, fundamental factors, basically the factors that determines this exchange rates. Fundamental factors are there. In this, balance of payment means basically it relates to whatever the policies, whatever the strength, whatever the weaknesses of a government present in that particular country, and it, due to these restrictions, due to the policies of government, due to the decisions of the government, currency rate strengthen or weakens. Then balance of payment, if a country export more than its import, if a country exporting more than its importing, that it currency obviously becomes stronger. But if they are importing more than they are exporting, so currency weakens. Okay, simple. If our country exporting more than importing, then the currency will stronger. If importing is more than exporting, then the currency weakens. So a fast growth economy increases production and export. If the everything is good in the economy, obviously, why? Because everything is happening correctly, production is good, exporting is good, that makes the currency stronger. But if government reduces any taxes or increases the spending, so it can boost the economy and it can affect the currency value. Okay, monetary policy means obviously there are some policies that controls the supply, that controls the interest rate, because this helps in making the currency more valuable, more stronger. Then some interest rate, high interest rate attracts the foreign investments for the short term, and that short term helps in strengthening the currency. But if too high for too long, obviously this will affect the economy and makes economy slower. And any type of stable government makes investor feel safe. If there is any stable government, that makes the investor feel safe, and also it helps in making strong the currency, because if any political instability is there, so no will trust the country, no will trust in the investment, no will showing their interest in making any type of investment in that country where the political instability is there. So that means political stability is one of the great type of benefit. So it will help the country to make the currency more strength. Then there are technical factors which obviously cause sudden or sharp changes. Why? There are so many non-economic reasons, and these economic reasons means where money is not involved. Non-economic reasons means where money is not involved, like government is there, like big inflows of money from the foreign investors are investing a lot of money, that will cause currency fall or rise. Okay, and some crises are also there, like Thailand, Indonesia, South Korea. These shows that movement can suddenly affect the exchange rate, and you can see the example of latest tensions between India and Pakistan. These things affects the exchange rates. These things affects the market. These things makes the market even higher or lower. So these are some technical factors which are not related to any type of economic activity. These are due to government, due to tensions between two countries, due to the bad environment in the country, due to the political instability in the country. Then speculation, fast and moving impact, but only for short term. If trader think that rupee will lose the value, so they will start buying the dollars. They are thinking that rupee will lose their value, so they will buying the dollars, and then they will sell them at higher rupee price, which makes a profit. Obviously, if one person is thinking that rupee will lose their value, they will invest in dollar, and when they, after some time, they will sell higher rupee price, which makes a profit. And this type of things making, pushing the exchange rates. And here speculators, they also bring liquidity. That means they will buy and sell the trading. They will do trading in more quantity, which makes the market much active and obviously deep for the investors. So they will do investment according to the situations. They will make the market highly liquid. Clear? Okay. Then so we have learned about the fundamental factor, technical factor, and speculation. Fundamental means long term value of currency. Technical, sudden and sharp movements are there, which is not pre-planned. And speculation, short term changes and liquidity is there. Then exchange rate mechanism, like how we exchange two currencies, how we sold and buy two currencies. See, in this basically we will learn that how the currencies, so bought and sold, buy and selling of currencies, and how the settlement will done. In most of the cases, everything is not happening immediately. Some transactions takes time, and these things depends what is the type of the deal. Like there are some deal, ready or cash deal, means deal will happen on the same day. Like if deal happens on 1st of November, then it will settle on 1st of November. If a bank A pays INR and receives US dollar on the same day, no next day issue, no after next day issue, same day, ready or cash, just do immediately everything. Tom means tomorrow, like next working day. If I deal on 1st of November, then this will settle on 2nd of November. Like if 2nd November is not a working day, suppose if any Jayanti is there, any type of festival is there, so that means settlement will happen on 3rd of November. Spot means 2 days, second working day. If anything is happens on 1st of November, then it will settle on 3rd of November. If 3rd of November is a holiday, then obviously automatically it will shift to the next day, like 4th of November. And this is one of the most common type of deal that happens in the forex market. So forward is also there. Forward is like if anything is happening today, then things will settle after the 1 month. Like if one thing is settled, suppose today is 1st of June, so the settlement will done on 30th of June. Okay, so Saturday, Sundays and holidays are skipped here. That things are not counted in the working days. So clear? Ready or cash, immediately. Tom means tomorrow. Spot means 2 days. Forward means after some days, like 30 days, 20 days. It will according to the contract. So spot rate, I told you 2 working days after the deal. Okay, and this is also known as base rate. Forward rate, it happens according to the settlement date. It is not same as the spot rate. It may be higher, it may be lower than the spot rate. Clear? So there we can see the example. Suppose a bank is there in buys this amount from bank B on 1st of November at this rate. If bank pays euro 10 lakh, so the settlement will happen on 3rd of November. Okay, if everything is happen on 1st of November, then plus 2 days we have to add 2 days, 3rd of November settlement will be done. This is one of the most common type of transaction. And spot market have obviously high volume, high liquidity, and there is fast moving rates also. So now I hope that it is clear. And one more concept is there: forward rate, premium and discount. Keep this thing is mind that what is the formula of forward rate? Spot plus premium, or discount we have to deduct. If the premium is given, so we have to premium. If the discount is given, we have to deduct the discount. Okay. What is premium or what is discount? Obviously, if currency is here higher than the spot rate, so it is premium. Suppose there is a spot 1.3670, and after 1 month it will become 1.3690. The exchange rate will become 1.3690. So obviously benefit is there. But discount is the case when the currency become lower than the spot rate. Like 1.3670 is the spot rate, but after 1 month it become 1.3640. That means US dollar is at premium, but British pound is at discount. So that is the concept of premium or discount. Clear? This thing, I hope that it is clear. Now, next. So that is the example. You can see US dollar INR is given here, buying rate, and selling rate is given. 6-month forward premium is also given. So we can see here forward rate will become 76.0100 and selling rate will become this. So US dollar become costlier in future. So obviously it is at premium, but INR rate is decreased, so INR is at discount. Clear that thing? Why this premium and discount thing happens? Obviously due to the fluctuations, due to the interest rate differences, due to the supply and demand and capital flows. If export imports problem is there, any political stability is there, any fundamental technical factor is there, any economic or trade policies is there. So these are the factors that because of these factors premium or discount generally happens. Now, direct or indirect quote. What is the concept of direct and indirect quote? See, direct quote means if the home currency is variable, home currency is changeable. For example, you can see US dollar is given, INR is given. So how many INR is there for 1 US dollar? And what is indirect quote? When the home currency is fixed, that means INR 100 is equals to that US dollar, that means that is fixed. So basically most of the currency are quoted directly in the terms of US dollar. They do not use any other types of currencies, and some exceptions are also given in this. So basically direct quote where the home currency is variable, can be changeable, but indirect quote home currency is completely fixed. Then what is the meaning of cross rate? Used when no direct quote is given for a currency pair. Why we use this cross rate situation when there is no direct quote is given? Like we have to find British pound INR, but only US dollar INR is given. So in that case, what we have to do, we have to multiply British pound US dollar. For this we have to multiply these both, so we can able to calculate British pound INR. Okay, suppose US dollar JVPI is given, so for INR JVPI we have to multiply, so we are able to calculate the INR JVPI. Okay, that is the cross rate. So what we learn, forward premium or discount tells that what will be the situation of the currency, that is costlier or cheaper in the future. Forward rate, that is influenced by the interest rate differences and market expectations. Quotes are given in the direct or indirect formats. Cross rates are used when direct exchange rate is not available between the two currencies. Then there is a concept of fixed or floating exchange rate. Fixed or floating exchange rate means fixed rate is completely decided by the government or the RBI. Okay, but floating rate, as the name is floating, that is not fixed. It depends what is the supply there, what is the demand there, what is the inflation differences between the countries. And in India there is a floating system since 1993 because in India there is a floating rate. It depends what is the supply and demand, what is the inflation differences between the countries. Now in currencies we are saying that this is the bid rate, that is buying rate, this is the selling rate, that is offer rate or ask rate. Two names are there, offer rate and ask rate. So that is buying and that is selling rate. Bid and offer rate we are saying. Exchange arithmetic and change rules. See, in foreign exchange, small mistakes swipe the all profit margins, and chain rule is there just to calculate the difference between or the rate between the two currencies with the use of third currency. It is just like a cross rate mechanism. Okay, what is value date? Value date, when the actual settlement happens, the date of settlement is called value date. What is the meaning of TT payments? Where the value date is usually same in both the currencies, that is called basically telegraph transfer payments. Like if one side gets the money late between the two parties, if one side gets the money late, they are not getting the payment on time, they will ask for the compensation, they will ask for the interest compensation. It is just like a like type of a, in Hindi we can say type of a byaj. Okay, so one more thing, we know that 1% means 1 out of 100, 1% means 1000, 1 out of 1000. Okay, that is the difference between percent and per mile. Percent 1 out of 100, per 1 mile means 1 out of 1000. Arbitrage means, arbitrage is there who is earning the profit uh, by buying in one market and selling in another at the higher price. What are the types of arbitrage? Like if there is one people who is buying in one market, but same thing it sells in another market at the higher rate, that is called the arbitrage, just for profit, just for making the profit. uh, that people is doing this is called arbitrage. What are the types of arbitrage? Simple and direct arbitrage means two market deal is there, two peoples are included here. Compound and 3 point arbitrage means where the three currencies or three centers are involved. Fast action is needed, fast action or fast decision is needed if price changes quickly and profit because the opportunities disappears fast. Everyone is there for grabbing the opportunity. That does not mean we have to take time, we have to be quick in making the decisions. So fast action is very important when because in the case of foreign exchange market, price changes very quickly. So it is clear that what is arbitrage in forex. I hope that it is clear. If any problem is there, kindly tell. Now next, so basically these are some common rates you will see in the type of transaction: telegraphic transfer, bills, foreign currency notes, traveler check, personal check. What is the meaning of traveler check? This is basically used instead of cash. People basically pursue with the traveler checks because they are used as a cash, and there are some telegraphic transfers also, there are some bills also. If I talk about the here, uh, like what is the meaning of telegraphic transfer? Okay, so here if I say telegraphic transfer, foreign currency note is easy, like the currency which is not in the INR rupees. Telegraphic transfer is a type of rate at which bank purchases a specific foreign currency from a customer, and where you can sell also your foreign currency to the bank when receive any type of international payment. Clear? Now, so what we have learned: fixed rate controlled by the government but floating according to the market factors. Bid means buy, offer means sell. We have to use chain rule to find the cross currency notes. We have to what is the value date, actual settlement date. What is arbitrage? It is quick when we buy and sell to earn from price gaps. Different forex transactions having the different types of rates. Now, what is forex dealing room? It is an important thing. What is the meaning of forex dealing room? Where all the trading happens. These are known as forex dealing room. Basically, people buys and selling the currencies for the customers and for the banks. Basic here, every funds are managed, every accounts are managed, and sometimes trade currencies are managed here. Why? Just to making the profit. These dealing room work as a separate profit center for the bank. The dealing room works as a separate profit center for a bank. This dealing room is very important because it helps the banks to earn the profit and surviving in the competitive market. Three departments are there: front office, back office, mid office. Front office main work is they are completely dealing in buying and selling the currencies. Mid office sees that where is the risk arising, what is the risk in the mid office, and overall in the bank, overall in the market. Basically their work just to monitor the risk and also ensures that everything is according to the rules or not, everyone is following the rules or not. Back office, basically they see that reconciliation, they see that everything is properly recorded or not, everything is according to the settlement or not, everything is according to the rules and regulations of accounting or not. So back office basically makes sure that all transactions are recorded correctly. Then what are the qualities of a dealer? Obviously a dealer have a good sense of knowledge. They know that how to work in pressurized situations. They know how to deal in buying and selling the currencies. They have to, they are enough to handle any type of stress. They are responsible, they are they are know that they are, what are their mistakes. Their jobs are very serious because even a single mistake wipe out the entire day profit and causes the big losses. And there are some basically two main position which basically dealer manages. They track any inflow of cash and outflow, any mismatch, the net amount of currency bought or sold. Dealers manage this within limits to avoid exchange rate risk. Basically two positions they manages: fund position, currency position. Currency position means whatever the net amount of currency they are buying and selling, dealers manage this, what is the limit there, so they can obviously avoid any type of risk. And why the concept of integrated treasury very common in everywhere, whatever it is, domestic market or foreign market, everywhere integrated treasury is very important. Why? Because obviously control is very easy in these type of integrated market. Forex market are growing greatly. better settlement systems are there, advanced trading environment is there. So obviously integrated treasury is important. What are the function of integrated treasury? Managing all the reserves, taking care of all the foreign reserves. They handles the liquidity, that liquidity, the condition of liquidity is proper. They manage all the assets and liabilities, they control the risk, they sets the prices, they develop and sell the derivative product, they perform any type of arbitrage, they ensure capital goods quality and return, they also minimize any type of NPA. NPA means non performing assets. Okay. So this thing is basically important in the integrated treasury market, and integrated treasury market helps in managing all the risk and regulations and all the things related to the market benefit. Okay. Then some guidelines are there from the RBI, and banks have to follow these rules because RBI is very strict with these rules. Every data must be managed properly, every role is managed properly, no data is accessible by anyone, confidential data should be there, every limit will be set for every bank, adequate capital should be there. So any risk situation in front of any bank, so they will tackle this situation easily. Value at risk model they have to use. Value at risk models, like they can help in measuring the situation of risk in the future. They regularly review the risk models is like a type of predictions, models do predictions, and reviewing these models is important, so the prediction will be accurate if any situation is there, so any bank will be prepared in advance to tackle that situation according to the models. Dealers have to follow limits on trade and stop loss. Then there is a limit on the counterparty exposure, counter risk, and overnight open positions. Every day evaluation is there, evaluation of forex profit and losses, so they can using the RBI approved route rates or not. Like forex profits are evaluated, that these profits are earned legally or not. Any losses, these are all our things are evaluated, and these things evaluated through the RBI approved rates. Okay. Then dealing room have the clear separation of their functions. Front offices are there who are completely deal with the buying and selling of currency. Mid office is there where risk management and compliance checks are there, and this is basically in settlement, reconciliation, and accounting. So dealers, they must be well trained, they know how to deal with the technology. Obviously big banks are interested in technology, so specialized team are also there to handle all the things related to the technology, and they are basically focuses on maximizing their profit, and they have to control their risk also. Okay. Then what is the risk containment in Indian banking dealing room? As you can see, in the India, bank have their dealing rooms, and important risk control include that dealers must know that what are their limits, all counterparties must know their set limits. Also they monitor any type of mismatches in the maturity date, they regularly check, they regularly evaluate the profit and losses. Also they reconcile the bank accounts such as nostro vostro accounts, and also confirm balances regularly with the correspondent banks. What is the meaning of correspondent banks? This is our third chapter, we will discuss, but I am telling you the quickly. Like any bank is there, okay, but this bank having the client in Germany, but in Germany no branch is there, so that bank will contact the Bank of Germany that do treat with these customers on behalf of me. That is the concept of correspondent banking. Now what are derivatives? I told you derivatives are the financial contracts whose value completely depends on the underlying asset like currency, stock, commodities, or the bonds. They basically help the companies and banks in managing the risk or speculating for profit. Some are the common derivatives, that is swap, future, forward, and options. Now, foreign currency futures means future contracts. These are very standardized because everything happens according to the agreement, and these are traded on regulated exchanges like Chicago Mercantile Exchange. Price also set according to the supply and demand. Contracts have the fixed size, having the delivery rates and other standardized term. Settlement must be physical delivery, can be physical delivery or any type of cash payment. And there are clearing houses who takes the guarantee of trade, and they are manages the credit risk through margin requirements. So basically here we can say that foreign currency futures are the standardized agreement that basically traded on the exchanges just to buy and selling the currency at a set price on a future date. Forward contract, they are private agreements happen between the two parties, and they will fix at a fixed rate. Like if they are fixed the exchange rate for the future date, they fixed in agreement that we will deal in that amount, whatever the price is there in future. They will make an agreement, they will deal in that price. Suppose if the amount is 80.42, in after 1 month it will become 85.42. No, they will deal in that amount only, they will use this rate only because they already do the agreement. Okay, and these types of contract basically are customized. They can't use more than one, like they can be used for more than or 1 year, and they are not traded in any type of exchanges. They don't need any type of like any type of exchange or particular established exchange, and they can be settled, they can be cancelled on maturity also. What are the meaning of option contract? Option contract gives the, this contract gives the buyer the right but not any type of obligation. They can buy, they can sell the currency at the fixed price before a set date. There are two types of options, call option and put option. What is call option? Where the right to buy is there. Put option, where the right to sell is there. Okay, the buyer pays a premium to the seller for this right. Like buyer here gives the premium to the seller just for this right. Okay, so here obligation is not there, only the right is will be given. Call option, where the right to buy is there. Put option, where the right to sell is there. So some important option terms: strike price is there, premium is there, spot rate is there. Strike price is there, the fixed price at which the currency can be bought or sold. Premium, where the cost of buying the option. Spot rate is the current market price. And options can be American also, which can be exercisable anytime before the expiry. European means exercisable only at the time of expiry. Then option status: at the money, in the money, out the money. These three things are very important. Then FEDI is a self-regulatory organization established in 1958, and basically it helps also in forex market with the RBI, and they provide all the guidelines to the dealers. And RBI is also playing an important role in managing the foreign exchange transaction and foreign exchange any type of things related to the foreign exchange. And I told you they give licenses to some authorized dealers. These authorized dealers are completely they authorized dealers are completely eligible, are completely able to handle the financial transactions. There are over 95 authorized dealer in which every bank, with some bank, private banks, foreign banks, financial institutions, cooperative banks are included. There are three types of authorized dealers: category first, category second, and category third. Category 1 are one of the most top level type of authorized dealers. They do all the types of transactions, foreign exchange transactions, whatever it is related to the current account transaction and the capital account transaction. Current account transaction basically focuses on the transfer of assets and liabilities, but capital account transaction is related to the remitting the money for travel, for uh, for education purpose, for travel purpose, for investment purpose. So examples of authorized dealer category 1 banks are commercial banks, state and urban cooperative banks. Authorized dealer category second banks, they can deal in non trade foreign exchange transactions. Then authorized dealer category third banks, they handles foreign exchange transaction but related to only international trade financing. If any trade financing is required, they handle these types of transaction. Where Exim Bank, SEBI is the examples, are the examples of this. Some are the money changes are there. RBI issues licenses to the foreign for the foreign exchange transactions for the to the hotel firms, shops. So they can deal in foreign exchange currency notes and traveler check. There are FMCs who are authorized to buy and sell the foreign currency. They get the authorization from the RBI. There are some restricted money changers also. They are only authorized, so they can't sell the foreign currency, they only buy the foreign currency. FEDI, I told you, it is there just to regulate all the transaction related to the foreign exchange, and it helps the RBI. It helps the RBI to grow. It supports the councils, export promotion councils. It develops and trying to improve the foreign exchange market. It promotes best practices. It creates uniform rules for fair competition and cooperation. What is the role of FEDI? It acts as a bridge between the RBI and authorized dealer. They connect them. They issues the guidelines that how to do the foreign trading, how to do handle all the bills. They represents the India's position. They provide the training to the banks. They provide awareness to these banks. They monitor the forex brokers and intermediaries. They also sets the rates for calculation of different things like value at risk and many other things. FEDI is there just to help and support the foreign exchange market, so everything runs smoothly. Everyone will work there just for profit and make the things easier for everyone. Okay, so with this, your chapter number first is completed, foreign exchange and exchange rates and forex business. Let me tell quickly that are you able to understand the things or not. I hope that everything is clear in this chapter. I completed all the things, all the important concepts from chapter 1. Now we are having our second chapter, LRS. LRS is easy chapter, liberalized remittance scheme. Next chapter we are having our uh, correspondent banking. So let me know that is first chapter is completed. Kindly be interactive. If it must be important for me also that first chapter is completed. Is it clear to all of you, or any issue in this chapter, please ask. So we can start this our chapter LRS2. And from today I will send 4 to 5 questions every day in your group, so you can come and vote on that questions and give trying to give the answer. So basically in fun way it will help to clear our some doubts. So let's start LRS. So first chapter is all about the transactions, all about the buying and selling of transactions, all about the FEDI. Not a very hard chapter, easy chapter. Just think that what is the concept of dealing group, what are the concept of FEDI, what is the concept of RBI, who are authorized dealers, who are Forex brokers, who basically what are the category of authorized dealers. That notes are enough. I will provide you the notes for quick revision. That is enough. Okay, I completed everything. Okay, in these, and maybe okay. So what are the one query is there, that what is the function of FFMC? See, FFMC are there just to buy and selling the currencies. They are they are the authorized from the RBI, and basically their work is just to buying and selling the foreign currency. Who are in the requirement of uh, foreign currency, they will do these things. Okay, so their main work is just to offering a type of method where they can uh, exchange their foreign currencies easily without any problem. That is the main function of the FFMCs. Okay, now LRS, liberalized remittance scheme. If someone in India wants to remit money abroad, wants to send money abroad, wants to receive money from abroad, so what are the rules and regulations are there for that person or for such type of persons? What are the things are there? We are going to learn these things in this chapter, and other facilities for the NRIs. What are the other facilities available for the NRIs? So let's start. Here we will learn about capital account transactions. Capital account transactions. A capital account transaction means any type of changes are there in the assets or liabilities outside the India, or any type of changes for the person who are resident in the India. These all types of transactions comes under capital account transaction. Like any type of changes outside India by the person who are living in the India, and any type of changes in the India for that person who is living outside India, that is called comes under capital account transaction. Like if someone is investing in a share of foreign company, that means that person is creating assets abroad. And if any person buying any property abroad, that means that person creates the foreign asset. Okay, so investing in foreign company or buying the property abroad, anything which is related to the creating the asset abroad comes under the capital account transaction. And what is current account transaction? Means other than any transaction other than capital account transaction, where the assets and liabilities not interfere. That is the current account transaction. Like sending money abroad for education, travel, medical treatment, paying interest on the loans, or earning money from the investment abroad. If someone have the property in Dubai and earning the money from the Dubai property, like in the form of rent, that is called, comes under current account transaction. Clear? Then section 4 is saying, some are the sections related to the remittances. Section 4 is saying holding assets abroad. A person cannot hold any type of foreign exchange, foreign money, cannot hold any type of foreign security or property outside India unless it is acquired while they were a non-resident. Like if someone is living in America and for the 4 years, and then at that time they acquire any property in America, so that person acquired that property when they are not resident of India. or any property they are owned outside India, it is according to the FEMA guidelines, then it is okay. But it is, if it is not following the FEMA guidelines, that is not uh, ab- eligible under section 4. So individuals under the liberalized remittance scheme, according to the rules and regulations of LRS, individuals can invest abroad. But there are some limits are set. Okay. Then section 6 is saying there are some permitted capital account transactions. Individuals, they are allowed to buy and sell the foreign exchange. They are allowed. So they can buy, they can sell the foreign exchange, but through authorized dealers. Only for permitted capital account transactions. RBI here decides what type of transactions are allowed and what are the limits are there. So with the help of authorized dealers, they can sell, they can buy foreign exchange only for some permitted capital account transaction. Capital account transactions means where they are doing any type of changes in assets or liabilities. Okay. Then if section 10 is what saying, if any person misusing the foreign exchange, use foreign exchange for any illegal purpose and not returning that amount of money in the prescribed time, so they considered that that person breaks the FEMA rule. Okay, that person breaks the FEMA rule, and that type of person faces the penalty of violation. Section 11 is saying RBI is completely giving directions to the authorized dealers that how to handle the foreign exchange transactions, how to collect and how to report, what type of information they have to send, they have to tell to the RBI. And if they are not following these things, so the penalty will be there. Penalty for authorized dealers, 10,000 rupees or 2,000 rupees per day if they are still violating the things. Okay. Section 13, if someone violates this FEMA rules, up to 3 times amount they have to give the penalty, or up to 2 lakh if the amount is they are unable to calculate, so 2 lakh they have to give, and 5,000 per day if they are continuing the contraventions. Okay. Yes, RNC here only to buy, not to sell. Okay. Clear? Okay. So these are some sections understood. So we can say FEMA is that rule that exchange that ensures that all the foreign exchange dealings are regulated and monitored properly. It helps India to make their economy valuable. Okay. So there are 3 schedules: schedule 1, schedule 2 and schedule 3. Let's talk about the schedule 1, where this schedule tells about what are the some cases, some remittances that are not allowed. Like these remittances are not permitted at all under the LRS. What? Commission for investing in joint ventures or subsidiaries abroad, payment for the callback services on phones, purchasing any type of subscription of the prohibited magazines, buying the foreign currency convertible bonds which is issued by the Indian companies abroad. Now the talk is there, what is the meaning of FFCVs? FFCVs in basically foreign exchange, in the context of foreign exchange we can say these are the bonds, are the type of instrument that basically are there in the foreign currency, they are issued in the foreign currency, and they can be converted into the equity shares for the issuing company. Okay, so basically this thing, uh, this buying of these types of bonds are not eligible. Dividends from the companies, dividend means dividend can be explained a type of a part of the profit of the company is dividend, and dividend is given to the shareholders, so they will be, this is like a bonus, so this type of dividends are not allowed. Okay, or interest income from the non-resident special rupee account, this is also prohibited. Money from lottery winnings, prohibited. Income from any type of racing, riding or hobbies, prohibited. Commission on export under rupee state credit route, that is prohibited. Means any type of commission, completely prohibited. That is come under the schedule first, where these remittances are not allowed. What is the meaning of remittances? Like remittances is type of, we can say, getting the money, sending the money, okay, abroad, sending the money abroad, that we can say. And then schedule second is saying remittances allowed but needs government approval. These remittances needs approval from the government. If any cultural tours, Ministry of Education and Culture is there. Ads, you want to give ads, Ministry of Finance permission is required. Freight payments, Ministry of Surface Transport approval is required. Any type of ocean transport, Ministry of Surface Transport is there. Hiring the transponders, IB and IT Ministry is there. Any sport activity you want to sponsor, Ministry of Youth Affairs and Sports permission is required. Then schedule 3 is saying, okay, let me tell you, and these types of remittances where no approval is required, they are freely available, allowed under the LRS. If you want to go America, if you want to travel America, you can go. But in the case of Nepal and Bhutan, you need approval. If you want to go Nepal, you need approval. If you want to go Bhutan, you need approval. You want to gift someone in America or any other country, no need to approval. You want to do donation, no need to approval. You want to going abroad for work, no need to approval. Immigration, like if you are going to move permanently, and close relative living maintenance abroad, if family member is living abroad and you are maintaining them, so don't approval needed here. Business travel, traveling as attendant for a patient, and any medical treatment abroad, studying abroad, buying any type of artwork from abroad, or other payments like health insurance abroad, these things are freely, like, not needs any type of permission. But some guidelines are there. Under LRS, PAN card is important. Whatever the remittance amount is, 10,000 or 50,000 or 2 lakh, PAN card is important. Then you can send money for permissible current account transaction, permissible capital account transaction. Okay, you can send only US dollar 2,50,000. Like current financial year is 1st April to 31st March 2025. So in this time tenure, you can send only this amount of money. That does not mean that if you are sending 10,000, 10 times, 20 times, 30 times, that does not mean. Any number of time you can send, but this limit should not exceed. Okay, then person sending money, that person have to choose only one bank branch, and there is smooth process should be there for the customers, and this thing ensured by the banks. Okay, if a person is new to the bank, and they wants to send money abroad, so bank have to check the background of that customer. Also, bank will ask that provide the previous bank statement, that what is the source of income, to confirm that. And bank examine that how is money coming and going out for that account, and check is any suspicious transactions there or not. What are the documentation required? वैसे basically RBI is not making any, providing any type of list that I need that type of documents only. They do this, give this responsibility to the authorized dealers. Now, what does the authorized dealers demand here? Generally, they demand for the Form A2. Generally, they demand for some simple documents, and declaration that from where the money is coming, what are the basically source of funds are there. Okay, then PAN card is required. If you are traveling, then confirm ticket and visa must be there, visa. And also tour operators can collect the money in INR or in foreign currency. For tour operators, they can also open the special foreign currency accounts in Indian banks. Also, tax collected at source. What is tax collected at source? Let's learn about tax collected at source. Like for the private visit, you can get take that cash 50,000. Okay, and you are allowed for the foreign currency notes, but according to the limits, and these limits are set according to the country wise. If you are not uses this money, then you have to give back this money in 180 days after returning from foreign trip or foreign uh, tour. And if you are not following this thing, then the section 11 is there, no, section 13 is there, no, sorry, 13, not 13. In this section 6, subsection 6, section 10 is there. Fine is there if someone is not returning the foreign exchange after returning from trip. Okay, but there are some cash limits for the Hajj pilgrims. And what are the foreign currency notes limit as per the Hajj committee rules? Iran and Russia, full amount is allowed in cash. Iraq and Libya, only $5,000 is allowed, and all other country $3,000 foreign currency notes are allowed only. Okay, if you want to gift a person who is not in India, you can gift that person, but your relative is according to the Companies Act 2013. In relative, basically spouse is there, parents are there, children are there, and who are not allowed, basically you can't gift them foreign security or foreign currency. Okay, you can make donation, but limit is this, and you have to explain everything, so you must have all the documents. For emigration, if someone is moving permanently, so that person is also remit this amount. If in some case that country requires more than this amount, so in that case proper document must required, so this thing will satisfy the bank. Okay, you can't invest in any type of foreign business in foreign land or foreign bond just to qualify for immigration. And foreign bank guarantees for jobs or immigration, that thing also not allowed here. If someone is going for employment in abroad, that person limit is same. If someone is maintaining abroad expenses of relatives, that amount is fixed. If someone is purchasing the art for personal use, amount is fixed. If business trips are there, so this amount is fixed. But if the company of that person is bearing all the expenses, in that case LRS situation is not applied, as LRS limit is not applied on that company. medical treatment up to US dollar 2,50,000. But if in such case, if any money required more than US dollar 2,50,000, then doctor estimate is required in that case. Same, if someone is studying abroad and I want to send money for that person, if that person is my close relative, so and that person require more than US dollar 2,50,000, so in that case I have to provide the university estimate to the RBI, so they can allow me to send more money more than US dollar 2,50,000. Okay, but those students who become NRI, they can remit up to US dollar 1 million from their NRO accounts. Okay, most important, tax collected at source. See, 5% is there for the 7 lakhs. Up for 7 lakhs is exempted. Up to 7 lakh, 5% will be there. If PAN card, Aadhaar card is not there, 10% it will become. Or in the case of education, 0.5% will be applicable over 7 lakhs. Okay, this applies only for LRS transaction, not for any type of business import or other type of remittances. So capital account transaction under the LRS, you can remit for foreign currency accounts abroad, you can buy the property abroad, you can invest in share, mutual fund, bonds, you can qualification shares for directorship, you can share as remuneration also. You can set your joint venture or wholly owned subsidiary, but that business is not related to any type of banking business or real estate business. You can give the loans to the NRI who are your close relatives. You can't direct invest in banking activities abroad. You can't invest in real estate business. Also, you can't gift the foreign currency to the residents, and you have to only use one branch for your all type of remittances, and the account should be active in branch for at least 1 year. Joint ownership is allowed if property is remitted is from multiple family members. Okay, clear. Now moving forward, okay, some prohibited investments. You can invest in joint ventures, you can invest in wholly owned subsidiaries, but that does not include the real estate, banking, business, financial services. And apart from this, documentation, you need A2 FEMA declaration, you need sources of funds declaration, PAN card is mandatory. Form ODI, in the case of overseas direct investment, you have to share the certificate of proof of investment, you have to send annual performance reports, you have to report any changes are there in the shareholding within 30 days. Then loans must be interest free. Minimum, if you are giving loans to the NRI close relative, that loan must be interest free, and 1 year minimum term should be there. And you can be giving loan for personal purpose, not for any type of agricultural activity, real estate activity, and that loan amount credited to the NRO account. Okay, NRO account, you have to take the money in the NRO account, and this repayment must come back to the India. Okay, that does not mean you are going abroad and you are going personally to take that money. No, that money should be there in the NRO account. Authorized dealers have to report all the transactions daily on the RBI XBRL platform. If no transaction is there, nil report must be submitted. This is the basically platform where they have to submit all the reports. Clear? So with this, our LRS chapter is completed. I hope that chapter is understandable. Now we are moving to the third chapter, correspondent banking. Okay. Just let me know up till now any problem is there. Everything is clear. In 2 minutes we are going to start the next chapter. Just give me 2 minutes. Okay. Correspondent banking. In India, there is a bank, suppose Bank Chunmun. Chunmun have their customers in the America. But Chunmun is very sad because it does not have any branch in America. Okay. Now there is a bank which is the Bank of America is there. Now Chunmun is saying that please Bank of America, serve my clients who are in America. So Bank of America say okay, I will do this, but this relation should be named. Like you have to give the name to this concept. So Chunmun saying that okay, we saying that concept is correspondent banking. Correspondent banking refers to that agreement where a bank provides services to the another bank, which is called respondent bank in a different country, that is called correspondent banking. These services, due to these services they can handle all the international transactions. They can do wire transfer, document collection, payments. They don't have their own branches abroad, but all the things they will do. It is having a banking partner in another country who handles the business on your behalf. So here Bank of America doing all the things on the behalf of Bank Chunmun, that is basically working as a banking partner there. Okay. So not all banks can have the global branch network due to cost and government regulations. Huh. So in this type of situation, not all the banks they are having a global branch network. Why? Because it is very costly to open a branch everywhere. Also government regulations are strict in many countries. So correspondent banking helps in international trade, helps in remittances, serves the NRI and expedites better. Also provide banking services in the foreign countries to the foreign clients, or ensures that low cost access is there for the foreign markets. What are the services provided by the correspondent banks? They can handling the trade documents, they can handle the international business transactions. Just 1 minute, I have to check one thing. this chapter is little bit big, so that's saying I'm saying that everything is included. So mostly everything is included, like everything is included, not mostly. So we have to be little bit quick. Okay, so what are the services basically provided by the correspondent bank? They are handling the documents, they handles the international business transaction. They deposit the collection, they do the transfer, they local clearing everything. They basically act as agent to the respondent bank in the foreign country. Also, some are the FATF guidelines, Financial Action Task Force. Basically, this is the authority that focus on stopping the money laundering, anti-terroring activities. They stops, and also no simplified checks for cross-border transactions. They avoid any type of partnerships with the institution. Those who are generally included in fraud and does not ensure the transparency. So obviously cross-border correspondent banking is very risky because we don't know the nature of every bank, and every bank nature is very complex, right? So FATF guidelines we have to follow in that case. Now what are the importance to India? Obviously there are so many Indians who are living abroad, so they want their bank services there, and they obviously sends money to their home. So in that case, correspondent banking is that concept which is very helpful for the Indians. And NRI remittances here form a major part of Indian foreign exchange reserve. If someone is in Dubai, someone is in America, someone is in Germany, they are working there and they sends their money in India to their family. So they obviously they will send their money in the foreign currency. So that will increase the foreign exchange reserve for the India. So banks in India offers services to these customers. So this helps in making powerful their foreign currency reserves, stronger their foreign currency reserves. What are the functions there for correspondent bank? If I say the functions here of the correspondent banking, correspondent bank means where one bank provides services to the another bank, where one bank provides services to the another bank, which is usually in the different country. These services are especially useful for international trade and the money transfers. What are the accounting services are there? Account services are there. These services requires the basically respondent bank to maintain an account with the correspondent bank. The correspondent bank handles all the things, okay, and in this it helps in sending and receiving the payments. It reimburses the money under the letter of credit, it collecting checks or draft, it also giving account statement and transaction report, it offers temporary credit line during the day while waiting for funds to arrive. So it correspondent bank works like a bank. Similarly, they do all the things like a bank is doing. They helps in collecting the money from import and export. They collecting the money, they after collecting they check that money is credited to the responding bank account. They may also remind people to say that the things will be according to that, everything is according to the people's. They protest against unpaid bills. They take steps to protect the respondent bank interest, okay. And also some special facilities are there, like to collect the checks faster and to lock the boxes. Means see they check that where clients can drop their checks and speed up the collections, okay. So basically in simple words, correspondent bank acts like a bank and perform all the things according to the bank. For the original bank, it performs everything like similar things. Okay. Now, just a minute. Okay. So moving to the next one. Correspondent bank carries out payment instructions. Payment, they perform all the instructions, okay, and they do payment according to the instructions. They provide the overdraft and loan facilities also, investment services also there, and also other services, where some of the services like they advising for the letter of credit, LC confirmation, they buyer and seller credit also there, bankers acceptances also there, issuing the guarantees is also there, foreign exchange services also there, some type of custodial services, trade referrals, credit report is also there, investment services is also there, training and seminars, fundraising services is also there. Then the most important, some types of nostro, vostro, loro and mirror account. Let's check about these accounts. Nostro, vostro and loro and mirror account. So what are these accounts? In international banking, bank use to open these account. Okay. Okay, so what are the nostro account? Just think, listen carefully. Nostro means our account with you. Our account with you means that our bank holds account, foreign currency account in another country. Suppose SBI maintains their US dollar account with Citibank in the New York. That is the example of nostro account. What is the vostro account? Your account with us means there is a foreign currency bank account in the India, from the another currency, like New York maintains a rupee account with the SBI. That is the example of vostro account. Then there is a loro account, means this refers to the another bank seen from the viewpoint of third bank, means Citibanks refers to the rupee account of American Express Bank with SBI, their account with them. Think this is a third party account. Now SWIFT is one of the most important thing, a very important global network where 11,000 banks are there in 200 plus countries. Here Society for Worldwide Interbank Financial Telecommunication, where it helps in sending secure financial messages between the banks. It operates 24 into 7. Cheaper method, most oldest method. It used a system called RMA, Relationship Management Application, Bank Identifier Code for message authentication. It used for payments, trade finance, securities and forex transaction. There is a CHIPS again. CHIPS basically famous in the USA. Works here banks will get UID number for easy processing. It is a net settlement system. Then FedWire, USA famous system is that basically it works on a real time basis, transfers the thing, provide the loans, commercial payments, some securities payments are there. 9,000 participants, over 9,000 participants FedWire have. CHAPS, UK version of CHIPS, used for pound sterling payment. This is happen famous in UK. 20 member banks are there, 4,500 indirect users are there. Target 2, target Eurozone RTGS system, famous in Europe, used for euro transactions. It is mandatory for any central bank operations in the Eurozone. Then RTGS Plus of Germany. It is a system having 90 participants. Then EBA clearing, Euro 1, netting system for cross-border transaction. Then RTGS and NEFT of India, two major systems of India. First one is RTGS, where we use to transfer large amount of money, and here the transaction settles immediately, and gross settlement means each transaction is handled one by one. Okay. Clear? Okay. Then NEFT means National Electronic Fund Transfer. It is used to transfer smaller amount of money, work in batches, suitable for regular and low value money transfer. No minimum or maximum limit. Now available 24 into 7, 365 days. Settlement happens in 30 minutes or an hour, and transfers after banking are using STP, that is automated system. So what is the comparison? Basically in this is a real time, one by one, and NEFT is batch wise. It is minimum limit, like 2 lakh. In NEFT there is no minimum limit. Then maximum limit, there is no limit. And NEFT, there is no limit. Availability 24 into 7, 365. It is 24 into 7, 365. It is best for large value transaction. It is best for regular small payments. Speed instant. Here speed fast. Instant means it settles immediately, and here it is settles in 30 minutes. Okay, just a second. Give me a minute only. So now, why these are important? Because for transfer of money, they are more secure. They have to, in this they reduce the need to send check or demand draft. They support India's digital banking and financial inclusion goals. Who are NRI? NRI have two definitions. One is according to the income tax section 6, one is according to the FEMA. Let's check out first according to the Income Tax Act. A person is a resident if that person is a stayed in India for 182 or more in the previous financial year, or stayed in India for 365 days in the last 4 financial year, and 60 days or more in the previous year. That is considered as NRI. Okay. So basically, who is NRI? NRI, according to the income tax, a person is a resident who stayed in India for 182 days or more in the previous financial year, who stayed in India for 365 days in the last 4 years, or 60 days or more in a previous year. If these conditions are not met, that person is considered as NRI. But there is an amendment from 1st of April 2020. If a person stays in India for more than 120 days or more and has lived in India for 365 days in the last 4 years and has an income above 15 lakhs from Indian sources, that person is also considered as resident for tax purposes. Then there is special category RNOR, resident but not ordinarily resident. You fall in this category if you stayed outside India 9 out of 10 years. You stayed in India for less than 730 days in the last 7 years. If you are a PIO Indian citizen with over 15 lakh Indian income and stayed in India for more than 122 days. See, these things are very like rote learning, this type of thing. We have to learn these situations. Okay, that what is the case in the NRI according to the FEMA, according to the Income Tax Act. So here RNOR basically 9 out of 10 years if you are stayed less than 730 days in the last 7 years, or if you are having the income for more than 15 lakh from Indian sources, and you are stayed in India in the previous year for more than 120 days and 365 plus days in the last 4 years, so you are considered as RNOR. Who is deemed resident? Who earns 15 lakhs or more in India from the Indian sources. That individual considered as deemed resident. Okay. According to the FEMA, who is NRI? A person who is going outside India for employment basis, who is gone abroad for indefinite period, for business, for studies, or no definite time to come back is there. So Indian diplomats, government employees, for people who are working in the international organization like UN, World Bank, IMF, these are considered as the NRIs. Who is POI? A person of Indian origin is not a citizen of Bangladesh or Pakistan, that is considered as person of Indian origin. Whose parent, grandparents or great grandparents were citizen of India, who is married to the Indian citizen and or a person of Indian origin. A PIO includes overseas citizen of India card holders also. So those students who are there abroad, they are considered by the NRI. Okay, those tourists who are going for short period, they are not the NRI. A foreign spouse of an Indian citizen is treated as PIO for the purpose of banking and investment in India. If they are doing any type of banking activity and investment in India, so that person will be considered as PIO. Okay, why NRI is important? Why NRI banking is important? Obviously an NRI have to open the bank account. They can open their special bank account. This account helps them to send money to India in easy way. They helps Indians to receive the foreign exchange, which strengthens their economy. Also they offers the investment and tax benefits to the NRI. What is the meaning of OCB? OCB are those companies, overseas corporate bodies are those companies, trust or partnership that are located outside India but 60 or more percent owned by the NRIs. Okay, but RBI from 2003 they stop recognizing the OCBs. OCB can no longer make any type of fresh investment in India. If an old OCB wants to invest now, it must basically not be in the RBI's caution list. Okay, and it must take prior approval from the RBI. What are the types of bank account for NRI in India? Types of bank account. NRI account is there, Indian rupees it can be open, tax free interest is there, NRI is there, Indian rupees, this is used to manage income which is earned in India. FCNRB account, it is opened in foreign currency, no exchange rate risk is there. SNRR, special non-resident rupee account, it is an Indian rupees for specific transaction and businesses. So to open any of these, NRI have to submit the application form, they have to give the undertaking, they have to provide the passports, visa and employment proof. Then NRI rupee account. What is a NRI rupee account? NRI park their foreign earning in Indian rupees. Who can use this money, this account? Who can debit the amount? Local payments. For local payments it can be debited. If someone wants to send money outside India, if someone wants to transfer NRI amount to the FCNRB account, if they want to invest in India, then what is the meaning of exchange rate risk? Account is in Indian rupees but money is coming from the abroad. See, if the here account is there in the Indian rupees but money is coming from abroad, so in this case exchange rate is borne by the NRI. Or if the rupee weakens, the value of foreign money in foreign currency obviously falls in that case. Okay. So exchange risk is basically raised by the NRIs. NRO account means this is a bank account in the Indian rupees which is open and used by the people who are living outside India, who are not living in the India, and who are the foreign tourists who visited in India for the short time. They can also open the NRO account because this account helps in managing the income earned by the NRI in the India, like any type of rent, dividend, or any type of matured insurance payment. So how they can open, they can open the amount, they can open the account easily. Also, what are the types of NRO account? Saving, current, recurring, and term deposit. Who can hold this NRO account? NRIs can hold this account. PIOs can also open this account. Foreign nationals who are coming in India for a short visit, they can also open this account. Money that can be deposited into the NRO account, if money which is sent for abroad, any legal income which is earned in India, any type of transfers from NRO account, any type of rupee gift or loan from the resident relatives within the government limits, money which can be withdrawn for local expenses, if someone wants to transfer to the NRO account, if someone wants to remit the current income abroad, repatriation is there for up to 1 million per financial year, transfers to the NRA account for up to 1 million per year. Some other important features are there. If a resident becomes an NRI, their resident account must be converted to the NRO account. If a resident come back to India and if a resident becomes NRI means they lives outside the India, they are converted their account to the, they can convert their account to the NRO account, their own resident account. When NRI return to India for permanent resident, so their NRO must be converted back to the resident account. NRO account allow nomination facility, meaning you can nominate someone to receive your account. Okay, account money. Resident can open the NRO account on the behalf of the NRI if the power of attorney is given. Foreign tourists, they can open also the NRO account during their deposit. During their deposit, they can withdraw the balance in the foreign currency if the account is held up for 6 months. So people from Bangladesh and Pakistan, they need approval, and foreign national leaves India after doing work here, so they can also convert their resident account to NRO account to receive any pending payment is there which can be repatriated abroad after paying all the taxes. They can, this money can be sent back to their country. Then foreign currency account, FCNRB account, basically NRI PIO open this account. It is a term deposit account, meaning you deposit money for a fixed period. The minimum period is 1 year and maximum is here 5 years. Money is deposited and repaid in foreign currency. No risk is there of losing the money. Joint account opened here. 2 or more NRI can open the joint FCNRP account, and it is a term deposit, so you can add money or withdrawal can be happens only at the time of maturity. No exchange risk here because money stays in foreign currency. You can send the money back along with your interest. Interest is paid twice a year. Interest income is exempted from the income tax in India. That income is not included in the income tax. Nomination is allowed here. You can give name to any person if you want to inherit the account. Or here forward contracts can be booked in these type of account. Then there is RFC account, though for those resident who came back to India and then settles to the India. Then when any NRI who came back to India and permanently settles there, so they can convert their NRI account to the RFC account. These accounts can be saving or fixed deposit. They can be jointly held with a resident relative. They allow credit include pension and insurance maturity proceeds in foreign currency. Whatever the interest earned here is completely tax free. Full repatriation will be done if this person become NRI again. So every amount will send again to that person, and after 2 years the NRI is treated as RNOR and interest earned remains still tax free. Then what is the meaning of SNRR account? Special non-resident rupee account. See, this account is still for the NRI, for the foreign residents who have the business interest in India to conduct, if they want to conduct any type of business in the rupees. Okay, in this they carries the business name and they do not earn any type of interest. They do business related deposit and withdrawals are allowed here. Their account can be held for 7 years. No foreign exchange can be given to any resident in India. Then money in this account can be repatriated abroad. Matlab, you can send money abroad here. You can't transfer money from this account to SNRR account, like NRO account to SNRR account is not allowed. It is subjected, it is applicable for tax. If a person become resident, the account may be changed to the resident rupee account. And Pakistan and Bangladeshis needs approval from the RBI before opening this account. Bank also give loan to the NRI or third parties. Loan can be used for the purposes which is allowed by the RBI. That is not allowed for any agriculture and real estate business. Housing loan is also allowed. NRI can get the housing loans. Okay, they can buy the residential property in India. Loan terms are similar for the residents. Matlab, that does not mean for residents the terms are different, for NRI terms are different. Loans terms are similar for every resident or every NRI. Loan may be secured by the mortgage or any type of collateral, and repayment can be done through the NRI, FCNR, NRO account. Some are the probated transactions for the NRI. They can't purchase any type of agricultural land. They can't open farmhouses. They can't open any type of real estate business. They can't do investment in government related sectors, and they have to do intraday trading or short selling in the securities. So with this, the thing that is completed our correspondent banking chapter. All the concepts from the correspondent banking chapter we have completed. So let me tell that, is that clear? Is any problem is there from this chapter, first, second or third chapter? Is the class is helpful for you? Is the things is understandable? Is the language is understandable? Is the notes are enough? Are the all things are covered? Kindly give the feedback, so it will help me to make any type of changes in future classes. Tomorrow we are having our second class at 7 p.m. Okay, so make sure join, and in this class, in that class we will cover next 3 chapters. And now please ask if you have any type of doubt, any type of problem, any type of thing you want to say, so it will help me to understand that everything is clear to you. So please ask that if you understand the things, that okay, please give the thumbs up that you understand the things. Is everything is clear? For RFSC account, interest is not there, interest, whatever the interest earned on the amount, that interest is tax free, that is not included under the tax, that is tax free in the India. No, in that case, you can say, yeah, if you are talking about any type of interest on the resident foreign currency account, they are applicable. Interest is applicable, but there are some rules regarding this, because if anybody withdraw the deposit before the maturity, there are different rules. RFC account, we know that can be opened as term deposit, and term deposit, we know that these deposits are known as fixed deposit. Okay, so interest range rates are ranges here. So for 1 year deposit, simple interest is there. Interest basically is calculated on the amount and the tenure of the deposit. Okay, so it depends on the time maturity. Thanks, thank you, Shailendra sir. You understand the things. If any problem is there, I give you the PDF. Go and check the PDF. Come in the group and ask your problems. So, uh, RFSC accounts. RFSC accounts, we can say these are savings accounts, current account. We can held them as saving account, current account, fixed deposit account. They can be held individually or they can be held jointly. We can say, okay. Okay. Clear, S. Kumar sir, everything? Okay, that's great. So next three chapters, let's meet in our next class. Take rest and be just go through with the PDF notes once. That will makes more stronger the things. So let's meet tomorrow uh, at the same time for our next three classes. Till then, take care everyone and have a good day all. Thank you.